Picture the date. It's June 23rd, 2026. And right now, as you are listening to this, there is $33 million sitting in a betting pool on the prediction market, poly market.
Yeah, which is just a massive amount of liquidity for something like this.
It really is. And the entire pool is focused on a single, frankly, mind-bending question. Like, will the United States government officially confirm the existence of aliens before the end of this year?
Right. We are taking what has historically been, the ultimate sci-fi mystery like, are we alone in the universe? And treating it as a highly liquid, highly volatile financial asset.
Exactly. People are trading the probability of extraterrestrial life the exact same way they trade, I don't know, pork bellies or interest rates.
Yeah, it's wild.
And that is our mission for today's deep dive. We are unpacking this fascinating financial article that was published just a few days ago on June 20th. It's titled, Trading the 2026 Disclosure, a guide to alien odds leverage.
A very dense read, but a really important one.
Totally. We're going to look at how sophisticated traders aren't, looking up at the sky for UFOs. They're looking at margin requirements, time value decay, and leverage to just heavily short the concept of extraterrestrial life.
Yeah, they're playing a completely different game.
Okay, let's unpack this. Because honestly, it feels completely disconnected from how the general public actually talks about alien disclosure.
Well, the smart money is banking on that exact disconnect. Like, to truly understand this market, you really have to establish the core theme right away.
Which is?
There is this massive structural gap between the public hype over, disclosure and the rigid, unyielding legal realities that actually dictate how these prediction markets pay out.
Right, because the public and the traders are looking at two very different things.
Exactly. When the public sees an unexplained video, they see aliens. When a trader sees that exact same video, they see a highly profitable short selling opportunity.
Wow. Okay, so if the thesis is that traders are profiting off this disconnect, we really have to look at the recent massive crash in this alien betting market.
Yeah, the timing of that crash is so counterintuitive.
It is, because it happened, paradoxically, at the exact same time the government was releasing more UFO files than ever before in history.
Right, the classic transparency trap. It caught, thousands of retail traders completely off guard.
So let's rewind a few weeks to May 8th. The Pentagon launches the PRUE program.
Right.
And this was just an unprecedented data dump. They released 162 declassified UAP files.
Yeah.
Unidentified anomalous phenomena.
We're talking thermal imaging videos, anomalous velocity radar data.
Yeah, pilot testimonies of objects doing things that just defy the known laws of aerodynamics.
It was huge. It was universally hailed across the media as the most significant disclosure event in American history.
And the market reacted violently. The poly market odds for a December 31st, 2026 confirmation, they spiked to a peak of 21%.
Which is high for this kind of market.
Very high.
Yeah.
A 1 in 5 chance that the government officially says aliens are real by New Year's Eve.
The euphoria was just palpable. But, within hours, the reality of the fine print set in.
Right, because the Pentagon issued a clarification statement. They explicitly stated, let me find the quote. Okay, here. These are unresolved cases. There is no confirmed extraterrestrial evidence in this database.
Yeah, that was it.
The market fell off a cliff. It dropped from 21% and just bled out over the next 6 weeks all the way down to 9.5%.
Brutal.
And this downward spiral continued even though the Pentagon released more files, right? Like we had a second batch on May 22nd, a third batch on June 12th.
Yeah, there was even a massive report from AARO, the All-Domain Anomaly Resolution Office.
Oh, right. The one stating that a staggering 40% of these documented incidents remain totally unexplained by modern science.
Exactly. So you have lots of transparency, but zero confirmation. And what's fascinating here is that the contract didn't lose more than half its value, like a 55% drop, because of some negative cover-up or a debunking campaign.
Right.
It dropped because of a thesis invalidation. The market had to learn a very expensive lesson about what actually triggers a payout.
Because to the poly market resolution, judges, unexplained by modern science means absolutely nothing.
Nothing at all.
The contract rules are incredibly specific. It only pays out if an active executive branch official goes on the record to confirm extraterrestrial existence.
That is the legal threshold.
Right. So declassified files showing weird floating orbs do not count. Congressional hearings with dramatic whistleblower testimony
also do not count.
Yeah, an official Department of Defense report saying 40% of cases defy the laws of known physics, still doesn't count.
No, the burden of proof sits entirely on the yes side.
It's like a highly publicized legal trial.
Oh, that's a good way to look at it.
Right. The yes side, the believers, they keep wheeling in endless boxes of circumstantial evidence, like the blurry videos, the radar data, the unexplained thermal readings.
Yeah, and the public looks at that mountain of boxes and just assumes guilt.
Exactly. But without a smoking gun confession directly from the executive branch, the jury is legally instructed not to convict. The polymarket contract simply won't resolve to work.
Yes, that is the exact mechanism at play. The market realizes that the threshold for the president, or like the director of national intelligence, literally standing at a podium and saying, "We are not alone."
Right.
That threshold is astronomically higher than just publishing a database of weird aerial phenomena.
Hold on, though. A 55% drop in the odds still feels like a massive overreaction to a minor bureaucratic clarification. I mean, going from 21% to 9.5% is brutal. Why punish transparency so severely?
Well, in a market bound by time, transparency that fails to confirm is actually evidence against the yes thesis.
Yeah, how did that work?
Think about it. If the government hands you their 162 most secretive, most compelling files, and literally none of them cross the legal threshold for alien confirmation.
Oh, I see.
Right. The probability that the next batch will contain the definitive proof goes down, not up. You've essentially emptied the vault of the best evidence, and it just wasn't enough. The probability space shrinks.
Okay, that makes sense. So if the thesis is invalidated and the market is bleeding out, the real question is how traders are surviving and actually capitalizing on that slow bleed.
Yeah, because they aren't just holding spot positions.
Right. The June 20th article details how traders are magnifying this decay using third-party margin platforms.
This is where the story shifts from a cultural event to a highly sophisticated financial operation involving margin and leverage.
So natively on Polymarket, trading is one-to-one. It is incredibly capital intensive. If you want $10,000 of exposure on a trade, you have to lock up $10,000 of your own actual cash in a smart contract.
Which is just terribly inefficient for a professional trader.
Yeah, that capital is trapped there, completely illiquid until the market resolves in December or you decide to sell your position.
Right. Tying up that much capital for 6 months on a single binary outcome limits your ability to deploy money elsewhere.
So traders are bypassing this by using third-party leverage platforms to get 5x leverage.
Exactly.
Instead of locking up $10,000 to get $10,000 of exposure, you only put down $2,000. The platform effectively fronts you the remaining $8,000.
Yeah, so you get the full exposure, but you keep 80% of your capital free to trade other markets.
It frees up your capital, but it acts as a massive magnifying glass on your returns. And crucially, on your losses.
Very crucially.
Let's look at the massive gains first. A savvy trader sees that May 8th spike to 21%. They read the fine print, realize the Pentagon just released files without officially confirming aliens, and recognize the market has completely mispriced the legal reality.
So they short the contract.
Exactly. They bet no at roughly 19%. They hold it for 6 weeks as the hype fades and the price bleeds down to 9.5%. On a normal, unleveraged trade, taking 19 cents down to 9.5 cents is a 50% gain on their money.
Which is a phenomenal return for just a month and a half of waiting.
But with 5x leverage, that exact same price movement translates to a 250% return
It's staggering.
in 6 weeks. Just by betting, the government is going to keep doing what the government always does, which is obfuscate and fail to meet the legal threshold.
And that is just playing the momentum of the crash. The more fascinating strategy is the no-side yield play.
Oh, right.
This is how the real institutional level money is treating the alien question. They are treating it like a high-yield bond.
So if the yes odds are sitting at 9.5% right now, that mathematically means the inverse, but no odds are sitting at 90.5%.
Well,
90.5 cents per share.
right.
If I buy a no share at 90.5 cents today, and I just hold it until December 31st, it pays out $1 full when the contract expires. Assuming the president doesn't introduce this to a Martian before New Year's Eve.
Which is a pretty safe bet.
Yeah. So I make 9.5 cents of profit on my 90.5 cent investment. That is roughly a 10.5% yield over just 6 months.
You are basically betting that the base rate of human history, that we don't get absolute confirmation of extraterrestrials, holds true for another 6 months.
And then you apply the 5x leverage to that trade, suddenly that highly probable 10.5% yield becomes a 52.5% return over 6 months.
It is essentially an alien non-disclosure money printer.
Wow. But the mechanism, Enabling that money printer is the underlying collateral structure of margin trading, and it is unforgiving.
It really is.
Here's where it gets really interesting because we have to talk about the danger for the true believers.
Right, the yes voters.
Let's say you were a yes voter.
Yeah.
You bought into the May 8th hype. You put down $1,000 at that 21% peak.
Okay.
Today, with the odds at 9.5%, your $1,000 is only worth about $452.
Yeah.
It's an emotionally painful 50% loss, but you still hold the shares. If disclosure happens in October, you still get your 10x payout.
Because you are still in the game. You own the underlying asset outright.
Exactly. But if you used 5x leverage to buy that exact same top,
Yeah.
your position wouldn't even exist anymore. You wouldn't be down 55%. You would be entirely wiped out.
Poof, gone.
Because the margin platform uses an automated smart contract to monitor the ratio of your collateral to your borrowed money. When the contract dropped from 21% to roughly 17%, your initial $2,000 of collateral could no longer cover the potential losses on the $8,000 you borrowed.
And the platform doesn't call you to ask how you feel about the trade. It doesn't care about your conviction in the alien thesis. To protect its own borrowed capital, the algorithm just force sells your entire position at a loss. Your investment goes to absolute zero.
It's like strapping a rocket engine to a bicycle.
That's exactly what it is.
Right. It gets you to your destination incredibly fast, but if you hit even a minor pebble on the road, you completely disintegrate. The broker liquidates your account to protect their own balance sheet.
It is the clinical, automated reality of margin trading. It punishes being early or being wrong about momentum instantly.
But let's look at the upside of the yes trade today, assuming you trade it without leverage. If I take $1,000 and I go buy these beaten down yes shares at 9.5 cents a piece, my $1,000 controls over 10,000 shares.
Right.
If there is a massive breakthrough and the U.S. does confirm aliens by December, I get paid $1 for every share. I turn $1,000 into over $10,000.
A massive payout.
So if the upside of being right about aliens is literally a 10x payout, why is the smart money acting like a boring insurance company, strictly selling no alien policies for a 50% leveraged yield?
Because professional traders don't trade on the hope of a paradigm shift. They trade on structural mechanics.
Okay, unpack that.
Structurally, the NUR position functions as a highly probable yield product that benefit from time decay. Think about what financial markets call carry.
Carry is essentially the time value of the contract.
Exactly.
Every single week that passes, without a massive paradigm-shifting announcement from the White House, the mathematical probability of it happening before that December 31st deadline shrinks. The hourglass is literally running out of sand.
Yep.
So the value of the yes contract naturally decays over time. The smart money knows that the base rate of government behavior is bureaucratic inertia. They're effectively harvesting that time decay every single day.
They aren't betting against aliens existing in the universe. They're just betting against the bureaucratic timeline.
Because they are betting on the legal definition of confirmation not being met within this specific calendar window.
Exactly.
And because they are harvesting time decay, these traders are living and dying by the calendar. I mean, all this leverage math means nothing in a vacuum.
Yeah.
We have to look at what's actually coming up on the schedule.
Right. What are the specific events that could either make these traders filthy rich or trigger massive liquidations?
Yeah.
This is the catalyst calendar. And the timing of this deep dive couldn't be better because the first major catalyst is staring us right in the face.
June 25th, 2026. Just 2 days from now, the U.S. Capitol is hosting the Disclosure Forum.
A massive event.
Yeah, it's a huge room featuring Avi Loeb, the famous Harvard astrophysicist, several members of Congress, and the major whistleblower, David Grush.
But according to the article, the leverage traders are expecting a complete fade on this event. They are heavily betting it won't move the needle toward confirmation.
Wait, really? They're positioning for the odds to actually drop after the forum concludes.
Yeah, exactly.
But wait, if you have a major whistleblower like David Grush sitting in front of Congress, testifying under oath to the existence of non-human intelligence, couldn't that massive wave of public pressure force the executive branch's hand? I mean, why is the market so blindly certain this forum is a non-event?
Well, if we connect this to the bigger picture, we have to go back to that core rule we established at the beginning, the legal standard.
Right.
The poly-market resolution doesn't care about public interest. It doesn't care if a hashtag goes viral or if a congressional hearing breaks historical viewership records.
Because the resolution strictly requires an executive branch official.
Precisely. The June 25th Forum is a legislative and scientific gathering. Congress is the legislative branch. They can demand answers, they can hold high-profile hearings, they can draft bills. But a member of Congress saying, I think aliens are real, does not trigger the payout.
Ah, right.
The executive branch, the president, the Department of Defense, the Director of National Intelligence, they hold the keys. The market is betting heavily that an institutional forum is not going to suddenly force the White House to rewrite human history on a random Thursday in June.
So traders might even short a contract right before the forum, knowing that retail investors will buy in on the hype.
Yes, exactly.
And then the smart money shorts the spike and covers their position a few days later when the forum ends and nothing legally binding happens.
It's a classic buy the rumor, sell the news setup, but dramatically amplified by leverage.
Wow. Okay, we also have the rolling PRCC releases on the calendar. We know the Pentagon is going to keep dropping batches of these files every few weeks throughout the summer and fall.
But as we've seen with the transparency trap, the historical base rate of these file releases causing market decay is essentially 100%.
Yeah.
Unless a release includes an ultra-clear 4K video of a spacecraft alongside a signed memorandum from the commander-in-chief, more files likely just means more opportunities for traders to short the non-confirmation.
Right. Then there is October 31st, 2026, Halloween. That is the deadline for ARO's annual report to Congress.
Yeah, the congressionally mandated accounting of all unidentified phenomena from the prior year.
Which is the last major scheduled binary setup before the December deadline.
And if that report comes out with standard bureaucratic language, citing anomalies but attributing them to sensor errors or foreign drones, the December contract will plummet towards zero.
Right.
But if there is even a hint of confirmatory language, we could see an explosive repricing that would liquidate every leveraged short seller in the market.
And that binary risk is pushing traders into alternative contracts. Right. I mean, we've been focusing on the main December 31st deadline, but the polymarket ecosystem has other ways to trade this timeline.
Oh, absolutely.
Like there's a June 30th contract which requires confirmation by the end of this month. It is currently trading at a microscopic 0.55%.
That is essentially terminal decay in action.
Right.
With only a week left in the month and only the disclosure forum on the schedule, the probability of a black swan announcement is mathematically approaching zero. Traders are just scooping up fractions of a penny waiting for the clock to run out.
But then there's this September 30th contract.
Yeah.
This one requires official confirmation before the start of the fourth quarter. It's trading at 4.65%. So incredibly cheap, but not quite at zero.
Yeah, it prices in extreme skepticism about any kind of summer breakthrough. Between now and September, outside of the rolling file dumps, there just aren't many scheduled opportunities for an executive branch official to make a definitive, world-altering statement.
So buying the September contract at 4.65% is basically like buying a lottery ticket on a sudden, unannounced summer blockbuster plot twist.
Yeah, you're betting the government drops a bombshell out of nowhere in July or August.
Right. Whereas holding the December contract is betting on the entire season storyline. You get the forum, the rolling releases, and the big Halloween ARO report.
And the math on that September contract is wild if you use leverage as a catalyst play.
How so?
Well, at 4.65 cents a share, $500 buys you over 10,000 shares. If some crazy unscheduled event hits in August and the odds just jump to 10%, your position doubles.
Okay.
But with 5x leverage, you only put down $100 to control that exposure. A tiny move from 4.65 cents to 10 cents represents a 575% return on your deployed capital.
A 575% return just for the odds ticking up a few percentage points? That's insane.
It is, but the risk is absolute. The compressed timeline cuts both ways.
Right. Either the summer catalyst happens, or the position decays to absolute zero by September 30th. There is no middle ground. And with leverage, you don't even have to wait until September to get completely liquidated.
No, you are walking a tightrope with no safety net.
So what does this all mean? As we look at the whole picture, $33 million, 5x margin platforms, congressional hearings, and structural time decay.
Yeah.
The core takeaway for you listening is that the alien disclosure market isn't a sci-fi movie.
Definitely not.
It's not Mulder and Scully out there looking for the truth with flashlights. It's a story about mathematical time decay, rigid legal definitions, and the brutal, unforgiving reality of margin trading.
Exactly.
The next time you open your phone and see a massive viral headline about UFOs, or a whistleblower, or declassified Pentagon thermal videos, you shouldn't just ask yourself, wow, is this true? If you want to think like the smart money, You should ask, does this specific piece of evidence meet the legal threshold of executive branch confirmation? Because if it doesn't, somebody on a margin platform is probably making a 250% leveraged return betting against the hype.
It fundamentally reframes how we consume news about the unknown. And honestly, this raises an important question to leave you with.
Okay, what is it?
We have highly sophisticated financial tools, massive liquidity, and leverage platforms now successfully predicting and heavily profiting off of the government not confirming aliens.
Yep.
If you can make an annualized 50% yield safely betting against disclosure, does the financialization of this issue actually create a perverse incentive?
Oh, wow.
What if the real forces keeping disclosure under wraps aren't mysterious men in black operating in the shadows? What if they are just institutional leverage traders, fiercely and quietly protecting their 50% yields?
Man. So maybe the real men in black aren't wearing suits, they're just staring at Bloomberg terminals. That is a wild thought to end on. Until next time.